Let's get back to the markets conversation. Are the charts pointing to a market pullback, as James has been predicting? Let's bring in the chart master, Carter Worth. So, Carter, what are you seeing?
Well, for starters, I'm all with James. I mean, listen, investing is risky, and for a long time, it's been almost like annuities. Downside's not allowed. And James made an important point before we get to a few slides. Once you drop 10%, you typically drop more. In fact, here are the numbers on that. There have been 25 times in the history of the S&P where you've dropped more than 10% from an all-time high. And the mean decline is more like 27, median around 21. So once you trigger 10, it quite often cascades into more. But let's look at what happened just this week. Slide 1. What we know is we just had a circumstance now where we're down 4 weeks in a row. That in and of itself is fairly rare. If you look at all rolling 4-week periods, 1928 to present, it's only happened about 2% of the time. Now, week 5, what happens? I mean, what could happen next week? The odds favor up, but they're not any different than all weeks, meaning you can see here, week 5, after 4 weeks down, is up 61% of the time. Week 5 is down 39. But those numbers, again, are about what markets do in any given week. So now, what is the performance after being down 4 weeks in a row? Second slide. The weekly performance in week 5 is very muted. Even if it's up a little bit, and again, it doesn't have to be, it's all suggestive that there isn't some great, well, because we're down, it must pop. We're not in that camp. Now let's look at two charts. Here's the first chart of the S&P. What you all know, we have the pandemic plunge. The S&P recovers to and above said plunge and now has fallen back below the tops of January, February. Another way to draw the lines, final chart, is just the uptrend that's been in effect since the March low. And obviously, optically, it's a very clear break in trend. So the real issue is, after advancing 65% from the low to the September 2nd peak, and the NASDAQ 85%, are we going to skip away with just a 10% decline when all of the statistics would suggest otherwise?
Does it change?
My hunch is we will not skip away.
Does it? I guess it doesn't change the filter through which you look, Carter, at all. The fact that market leadership is so concentrated in technology, and on the last trading day of the 4th week of declines, we saw such a strong bounce in tech specifically.
Well, that's right. If you look at today, it's almost always this hourglass. All of the things that are cyclical, financials and energy and industrials, not doing well, and you have just a handful of names. Communications is one stock, 2 stocks, Facebook and so forth. I mean, consumer discretion was up. We know that's Amazon, and we know tech. So it remains the case where it's just a few champions that hold things together. When they're down, the market's down, and when they try to recover, you put on a recovery like today, but it doesn't fix things.
All right, Carter, thank you. We'll see you in options action in a little bit. Carter Braxton Worth. Steve Grasso, I want to go to you. We never got your take on this prediction for a big pullback, which will start next week. What do you think?
So I like 2 things. I like bold calls. James gets a thumbs up for that. I love data. He gets a thumbs up for that.
I smell
and when you look at the levels, no. There's no butt coming. So I had felt as if we should back off 20% as well, and that's why I threw out that number of 2850 or so, 2860 in the S&P cash. I think we're heading there. And that might be the first test. But when you look at generational bottoms, when we look at the COVID bottom, it took 23 days to go from the highs that we saw pre-COVID to the COVID low of 2191. Then it took 99 days to get back to that level. So the question is, as we said the last time I was on the show, is it a dip and you have to pick your dip worth buying? I think you could start to nibble once we break 3,000 in the S&P. To do it now, you're setting yourself up for failure.
To break 3,000, I mean, more specifically, though, the last time you were on the show, Grasso, as memory serves, 2850 was the downside level that you had actually cited. So that's actually the level at which you would say, right, that's my dip.
That's my dip. My dip is 2850. I want to be about 20% down from all-time highs. And I think Carter had just mentioned, once you go down 10, The median is down 27%. So I think that's the time we could start buying.
So just to button this up, James, what's your dip then? That level on the S&P.
So we've got 2890 as a key support level. We think that 2890 is imminent. 2850 is likely. We think 2890 is imminent, and if there, we'll see where our central government comes in to offer support again. I think that is something that we have to consider if we look at historical data. Chairman Greenspan and Chairman Bernanke didn't come in so quickly to rescue things, and so we do have to keep that in consideration. But 2850 and 2890 are very close, and so either way, we're coming down.
All right.